All right. Hey, everyone. Mark here. Thanks for joining me today for today's stream. If you're new here, let me explain to you how this works. Let me make sure I have my comments up. So if you see what you guys are writing to me, okay, cool. So here's what we're going to do. As usual, we're going to run through the economic calendar real quick, make sure that we're aware of what economic events are coming out this week. Second, we're going to run through the charts. We're going to take a look at Bitcoin. We're going to take a look at Nasdaq, gold. You know the story, right? We're going to be looking for major potential reversal levels so that you will have an idea of what to anticipate and prepare, and also understand your risk for swing trade type of trades, basically. And then after that, we can go over charts that you want to see. If you have a symbol, right, or a chart or an altcoin, whatever, you want to share that, you want to put it in the chat, we could take a look at your chart and also assess the levels and the risk for that as well. So that's what we're going to do. All right. And then also we could turn a Trade Scatter Pro on and see what that thing is showing in terms of risk and things like that. All right. So again, welcome. Also, if you want to share what city or what country you're from, it's always a fun fact. I'm streaming from the greater New York City area, northern New Jersey. Right. And by the way, if you're going to share your symbol, just make sure you put long or short in front of it so I know what context to evaluate that symbol in. All right. So cool. Hey, Kai, good to see you. We got Christos. Hello. Hello, Christos. James. Hey, guys. Good to see you guys. Savi. How are you? From Brooklyn. Savi from Brooklyn. Even though Savi doesn't talk this way. Other people in Brooklyn talk this way. All right, Savi. How are you? All right. Good to see you. Okay, cool. So let's get this thing started, shall we? So we're going to talk about the economic calendar first, right? And this week, here's what I saw that was worth mentioning. I mean, there was a bunch of things, but most of it is not worth mentioning. We have, I believe it's tomorrow, we have Canada CPI. Who cares? Who even cares about that country? Okay. We also have, I think it was on Wednesday, we have a bunch of things. We have I believe President Lagarde is speaking from the ECB. Who cares, right? Who really cares? We have, I believe there was a British CPI also, I believe on one day. Again, that's not a global market moving number. I'm just mentioning these things because this is what I remember from the economic calendar. They're not that important. Okay. I also saw, I think the governor of Bank of Australia is speaking. That might be tomorrow also, right? So then Wednesday we have like the British CPI. Thursday I saw we had, there was something on Thursday. I don't even remember. It wasn't that important. And then on Friday, of course, that's the only day that has something worth mentioning, and that is the CPI report. Now, this CPI report is the one that we missed like a week ago or whatever because the government's closed, but they're mandated to release this report because they have to do some type of calculation for. There's a reason why they have to do it. I'm not going to get to all the details. You can Google that, but they have to report the CPI. It's important for cost of living expenses or something for the Social Security, something like that. Anyway, they have to come out with this number, and it's scheduled for Friday. Okay, so that usually. Oh, what stocks? What stocks? Jobless claims, but not in this country. What country, Christos? I missed that one. Hey, Izzy, how you doing? Nice to see you. All right, so I know we have. I'm glad you guys are checking out the calendar. Kai, what stocks are reporting this week? Because that's something I don't watch that closely. But the CPI, yes, the CPI is the main number this week that you have to pay attention to. That is typically 8:30 a.m. Eastern time. Right now, just keep in mind this is an unusual scheduling of the CPI. This is not the normal CPI schedule. The CPI was supposed to come out a week ago. Okay, so that's U.S. Oh, that's interesting. How it wasn't on my calendar. But all right, jobless claims, huh? I missed that one. Hey, DJ, is that DJ the DJ from way back in the day? DJ, how you doing, man? If that's you, yeah, okay, it is you. How you doing, man? Long time. DJ used to follow me like, man, we're talking like 2018, man. 2020. Back when we had the old chat room and stuff like that. Oh, DJ. Okay, cool. They're reporting this week. Yeah, that's a high profile one for sure. So you want to be aware of that. But the thing is, I mean, if they have like a really bad number or something, it can certainly have an effect on the Nasdaq and on the S&P, for sure. Not really an effect on the dollar. But yeah, DJ, man, he goes way back. It's good to see you, man. Good to see you. All right, he remembers like the way back when we were like when I was with the other guy. Yeah, man, long time ago. Well, good to see you. I'm glad you're all right. I'm glad to see you. So anyway, yeah. All right, guys. So let me know if there's any stocks or anything you want to see or any coins in the chat. Just put long or short in front of it so that I know what context to look. All right, cool. I remember DJ we used to talk to him about like if there was stuff going on like in the cannabis business or whatever. Like he had all these like insider details on what was going on with those stocks. Not really like illegal insider stuff, but he was very involved in that. I guess he knew the details in there. I remember those days. Okay, Netflix. Oh, they're all this week, really? Wow. Netflix, that's another big one. Okay. Wow. What is that? Is that Q2 or is it Q3? No, I don't even know. Well, I guess we're in Q4 now, right? Yeah, so that's probably Q3 because we get the Q4s in like January. Yeah, right. Good old days, right, man. All right, good to see you. All right, Q3, right? Okay, Q3. Interesting. Well, thanks for making aware of this of that, Kai. Again, big names like Netflix and stuff like that. Those are Nasdaq movers. If they report something bad, the Nasdaq is going to feel it, right? And the S&P. If they report something good, these index markets will also feel it because these are heavyweights, and they can have effect on the market, not on the dollar. I don't believe they'll have a major effect on the dollar, right? They're not big enough for that. So just that's the CPI report can move the dollar. So just keep in mind. Now we have a lot of strange things going on. I mean, gold was up over 100 points, whatever it was today. 100. I think earlier I looked. It's like 140 points. We're going to take a look at gold here soon. But I mean, man, like gold is out of control. There's just some strange things going on here. We had that sell off like a week ago or whatever, thanks to a tweet, and now we're back at the highs again. Right? So I don't know. Anyway, all right, let's get into the charts. So we're going to start with Bitcoin as usual. And guys, feel free to ask questions. Also, if you don't agree with me on something, please let me know. That's what we're here for. We're here to debate these things, right? I'm open to hearing other. I don't believe I'm right all the time. I'm wrong often. So, I'd like to hear other people's perspectives, especially people who spend time on the fundamental side of things. Kai has like a macroeconomic view of things. Maybe DJ, you guys have more of a macroeconomic view on things. So I love to hear your sides as well. All right. Now, in my article that I published on TradingView on Saturday, I talked about we were fooling around 106, 107 at the time, something like that. And I talked about that was a buying area, right? We got the inside bar, which I described. At the time, there was no inside bar when I wrote that article. Okay. We got the inside bar right here, and we broke the high of the inside bar, which was 107,535. And since then, this thing has just been going higher, right? So we're basically, what's the high today? Almost 112. Okay. Almost. Now, that would have been a nice swing trade. I don't know if anyone is in that. But that, again, the key to something like that was the level, right? The level. This was an important level. We touched as low as what, 103 on this area? So we never broke 100K. We were in the 105 area, which was the range low. Let's look back here for a moment, right? Where this thing bottomed. Is this a coincidence? I mean, look at that. That's meaningful. I mean, it's been fooling around this area before. I mean, look at this. Look at all the price touches. Look at all the activity in this area. So what that tells you, again, you're not going to be able to pinpoint it exactly. But the thing is, the general area should have told you this is not a place for shorting, that's for sure. This area is not a place for shorting, it's the range low, okay? And just like this area up here is not a place for buying. And we've talked about that on my streams, right? So where we are right now is we're on our way back to the middle. I talked about we had a minor resistance around 109. Well, it looks like we blew through that. When I say a minor resistance, again, that requires confirmation, right? There was no confirmation of a bearish reversal, not on this time frame. It's possible you could have gotten something on a small time frame, like a 30-minute or a 4-hour or something like that, but that eventually got compromised, right? And it went a couple of thousand points above. Okay, that's minor. Now that's why I drew this illustration right here in case we rejected that minor resistance. But no, we blew through it. If we rejected it, we could have been looking at a possible range low double bottom. But that's not what the market looks like right now, although it still may turn into something like that. That's just a possibility, right? I can't really put a probability on this possibility. Like, what's the probability we're going to get this scenario? I don't know. I really don't know. It's just, does the market confirm or not? That's what I look for, right? Kai says, I think there's a fear of recession going around. But so far, data does not yet conclusively support that fear. Right. I know gold has a lot going for it. I know. I realize gold has a lot. So any pullback on gold is like right now, if anything, you should not short gold. Okay. If anything, that is a definite no. Okay. So buying it, you want to try to, if you're going to play it intraday, we could look at it intraday. When I see markets move like gold, that's like there's a lot of intraday opportunities and something like that because the broader trend is clear. So now you're just looking for minor pullbacks. And I think there are like even day trade possibilities on something like gold, So, but back to Bitcoin here, right? Thank you for sharing that, Kai. Bitcoin has this situation. There's no rejection. We don't have any type of reversal here. Alex from Romania. I love Alex from Romania. How are you, Alex? Romania. Every time he shows up, I'm going to say that word 10 times. Romania. He tried saying New Jersey a few weeks ago, but I'm like, it's not the same thing, man. It just doesn't sound the same. Romania sounds so much more powerful. Romania. So anyway, and plus you got the Tate brothers over there. So, you got celebrities over there. So, all right, cool, Alex. I'm glad. So, I always feel good when I have my Romanian, my one guy. Alex dates back to the time when I had a whole bunch of people from Romania in here, and I was famous in Romania very briefly. Alex is the only one that still shows up to my streams. So I'm still somewhat relevant in Romania, just not as much. Anyway, all right, so back to Bitcoin. I know I have to go on my tangents here. I got to make the stream a little entertaining, otherwise it'd be really boring otherwise. His first short ever with money he can't afford to lose. Yeah, man. Wow, was it that long ago? I remember I had all the Romanians in here. The whole country practically was in here. And then little by little, they thought they went and found someone else, but not Alex. Alex is committed. Okay, he's committed. Romania. That's why I have to go. When I do my European tour, I'm going to make sure I stop in Bucharest so I could see Alex in Romania. And I could say it a million times when I'm over there. And I can have some mitite. Okay, I can have some mitite over there in Romania. So anyway, so this pullback scenario, right, on Bitcoin is just not materializing, although it might materialize. Yeah, Schwartz, right. That's right. Schwartz. We had Dr. Schwartz, and then there's Dan, and then there was another guy named Winter Fresh. Those were all my Romanians, and I guess they found someone else to follow, maybe a Romanian guy or something. So anyway, yeah, I remember them. So so here's my point with Bitcoin. I know I keep going off on my Romanian tangents, but here's my point here with Bitcoin, with this pullback, right? With this possible pullback, is we could still see this week. And my point that I want to make is watch for the failed low or the double bottom situation. That would be another buying opportunity. Right now, buying this carries more risk if you're looking for a swing trade. I mean, investing wise, you were better off at 106, obviously, 105 or 103. Like that's something you have to just have the courage to step in front of with a small bite, and you control your risk with your size, because the 100K area, I believe, is a much more attractive investing area, especially compared to 120 or 125, right? Which I thought was just outright foolish to be buying at those levels, right? But 100K, that's a little more doable, right? But even better would be 95K, 90, 85K. And I suspect that's where a broader wave two could take us. But I don't think we're in that broader wave two. All right. The fact that we held 100K and we bounce off so like we bounce off so quickly off of it tells me that we're still in the range, right? And this entire range that we're in, I still characterize this or classify this as wave four. We're still in this wave four until we clear 100K with decisiveness. I suspect we're in the wave four. Kai says, I'm still working on quality shorts. Okay. I have something to say about that. Yeah. I almost took a short on Nasdaq on Friday, but I never got filled. I was trying to take a debit spread short, and I put the order out there, and I left it a day order instead of a good till canceled, because I'm like, well, if they don't fill me today, then I don't want it anyway. And I never got filled, and the market's higher today. So I was looking at a Nasdaq. I forget the price. I think it was, I want to say 480, 490, 485. I can't remember the prices I was looking at, but it was I thought it was a pretty, and it was also 3 months out. Because if I'm looking at long spreads, I'm looking at at least 3 months out. If it was a short spread, short premium, then I would look at a couple of weeks or a month out rather than 3 months out. So anyway, but I never got filled. And I was looking at it today. I'm like, I don't know. This market's ridiculous. And now we're going into holiday season. So I don't know. Maybe I can get better prices. Like on NASDAQ, something like 620 might be a good bear spread. Short 620, buy 625, something like that. But that would be 1 month or a few weeks out, since it would be short premium. Anyway, but I'm not in that position. It was something I was looking at. Anyway, all right, back to Bitcoin. Man, I'm on tangents today, man. Today must be Monday. So here's what I'm saying. Watch for this scenario, right? Maybe we get a failure here over the next couple of days. Maybe we get a bearish pin bar or something, or an inside bar, and maybe we pull back into that low. But I would be looking for the reversal to go back long in that area. Okay. I want to short SPY, okay, and a few other stock, but I don't know. All right, well, good. I'm glad you bring that up, DJ. I'm glad you bring that up, because we'll take a look at that, and we'll take a look at what my thoughts are on the shorts as well. Because after that fiasco on Monday, what we had with the tweet, after that, like when we pull back, I think it'll be significant and it'll be fast. So I think there are some selling opportunities, but you have to be careful with them. And I think options are the best way to play these, for sure, DJ. I think options are the best way to play. It's too early for bears. Right. But the thing is, Kai, when the catalyst comes, like I thought maybe that sell-off that we had, that 1,000-point sell-off, could have been the beginning, the catalyst, right? But it was just a tweet that caused that, right? It was just a tweet. There was nothing really substantial behind that sell-off, right? So when we get our initial move, it's probably going to be large. And so I'm and trying to position yourself for that initial move is usually a very expensive process. So sometimes you're better off just waiting for the initial move, let it happen, and then start positioning. You're not going to get the best prices, but who cares, right? At least you're positioning yourself for the broader move, right? And we don't have that right now. And the other thing is, from the stuff that I've seen economically, everything seems to be pointing in the we're going to cut rates forever and we're going to print money forever story, right? And if that's the case, if that's the case, I don't know how we're going to see I don't know how we're going to see a bearish environment when, as our dollar goes to zero. I just don't see how these things are going to sell off. Out of the money, way out of the money, just 100, 200 here, right? Is that is, right? Oh, oh, I've seen that. I've seen that word taco. I don't know. Oh, because he bluffs and then it's he's just playing a game, man. You know, he knows what he's doing, and he's basically playing a game with the market, right? And I'm sure he's hooking his friends up and stuff, and he's helping his friends time this because I mean that's he a tweet can move the market 1,000 points. So I'm sure that's a nice little temptation there, right? So it's not a good catalyst because it doesn't stick, right? It doesn't stick. So there needs to be something substantial that's going to stick. So anyway, but yeah, so we're going to get into that when we talk about gold. So stick around, guys. We're going to talk about gold. We're going to talk about the interest rates. We'll look at the bonds, all that stuff, and we can get to the macroeconomic stuff here because yeah, there's a lot to say there. But so right now, as far as Bitcoin, you guys understand what I'm saying here with Bitcoin? Like right now, as far as swing trades, you can't do much here. The 113K, which we're on our way back, that's my little arrow over here. I suspect now this is going to act as a more of a significant resistance, even though it's in the middle of the range. And as you guys know before, I've said that this is a 50% area. Um, right, right. This is why I run. Right, right, right. Kai is sitting there saying he's working on both sides, but I believe just on real quick before I just want to say about that when you're like we're basically at market highs, right? Generally, all-time highs and stuff like that. So easing into a short or we're developing a short, waiting for that broader move, it's not a bad idea, but it's a hard idea, and it's not easy to position yourself that way, right? And you are going to lose money probably somewhat in that process, but when you catch it, then you got to make sure you ride it, right, to make that money back. Fed's M2 money supply. Okay, well, actually, we may be able to look it up here on this platform. I think we can pull up the money supply, but I've seen charts. I've seen that M2 money supply chart, and it's like vertical. It's like ridiculous, and that right there is what's part of the reason why gold is going berserk and everything else, right? Because they're just in money printing mode. Like and that's where I get confused. Like they're just going on. They're just going all in. You know, since it's like right, right. It's right. It hasn't been as dramatic as some of these other markets. But so my point, as far as levels with Bitcoin, just getting back to Bitcoin, watch 113K for resistance. Certainly, I would not look to buy something there. Okay, the buying opportunity is missed, I think, unless you're working on small time frames. QT should stop, but even during well, because there's a few things in play, right? There's a few things in play. They were supposed to be taking money out of the system, but at the same time, they were doing other things were happening that basically, lowering the rates and all that stuff. Money they were putting more money into the system, right? Remember, they can also use the bond market to quietly affect things, right? They can buy treasuries or sell treasuries without making a big deal out of it, right? Without saying anything, and that's also a control that they have. They that's an option that they have, right? That's why we have to watch the bond market. So, but anyway, yes, it gets confusing. All right, so you guys follow me with 113K. So we may get up there. If you're long Bitcoin, that might be a good place to take money off the table or look for selling confirmations. Yeah, we're going to take a look at the bond market, right? But otherwise, there's nothing else you can do really with the Bitcoin right now. If you have some, that would be a good place to sell. Or if it blows through there, then you're looking back up here. I mean, those are levels. We had some minor levels that I drew over here with these rectangles, right? Right. That's right. Well, they use this terminology, right? Powell says they either expand or contract the balance sheet, right? He uses that language. So when they expand the balance sheet, that means they're putting money into the system, right? So how do they do that? How do they put money into the system? They usually buy bonds, right? They're basically buying a bond is like they're putting money into the system. Whereas or they're buying treasuries, right? When they sell treasuries, they're usually taking money out of the system, right? Balance sheet. Oh, there's a ticker for that. Oh, cool. We can take a look at that. So that's the language that Powell uses. So, and that's another important aspect of the whole thing because when the Fed expands their balance sheet, that's inflationary, right? They're pouring. That's the M2 money supply growing. So anyway, all right. So I think I talked about it. Bitcoin. I'm sprinkling all this other talk around this Bitcoin chart, but do you guys see where I'm coming at with this? So there's really not much you can do with it here. I mean, if you're going to day trade this thing, that's another story. There's plenty to do, but we're not talking about that time frame. We're talking about this time frame, and this is what I'd be looking for as the week continues here. Potential pullback, which may not happen, or this 113K potential resistance for an aggressive short. I don't short it, by the way, DJ. I still don't short Bitcoin. DJ can tell you back then I was saying the same thing back then. Okay. But if anyone else has the appetite for that, and you get that reversal confirmation around 113K, that's a possibility. Okay. That would make sense. Okay. Yeah. So let's move along here and let me know if you have questions about Bitcoin. I'm going to move along and we're going to take a quick look. Let's get into the stock market here, shall we? So we can look at SPX, or actually we can take a look at let's look at ES, right? ES, that's the futures, ES1. This is the S&P futures. Now the Nasdaq is going to look very similar to this, right? Look at the futures today, right? Up 62 points. That's a lot for the S&P. And this is the daily time frame, right? Look at this. This is just, it's nonsensical. You could see the Trump tweet over here. This was the Trump tweet right here, right? And since then, high or low, and we're back to the high, basically. We're back to the high. It wasn't very long before we just kind of got back up there. So this most likely sucked in a lot of shorts. I thought too, when I saw that, I'm like, that's a pretty significant candle, but the candle is meaningless if it's just based on a tweet. Like Kai was pointing out here and stuff like that. Yeah, it doesn't carry a lot of weight. So basically, when you see a large candle, if that candle was a result of a tweet, then you should probably be looking to buy or at least not get short, right? So we're back at these levels and there's really not much you can do. We have resistance up in here, right? That's our resistance right there. And there's nothing that says sell this thing right now. Now, here's what I was thinking as far as short. We could take a look at the Nasdaq. We'll go to the Qs. Okay. Here are the Qs. I mean, look at this. The Qs are sitting on their high, basically. And now we have these major reports, right, from Netflix and the car guy. We'll call him the car guy this week, right? And if those reports come out good, which is likely, I mean, in this environment, then we're possibly blowing through to new highs. Those stocks have that kind of weight, right, on this thing. So look at this. So we're sitting on the high. Now, I was thinking, as far as a short goes, first on Friday, because I was looking at this candle on Friday, and I was looking at the candle before it. I'm like, okay, maybe we get the lower high, right? But I was thinking, okay, I'll do a put spread somewhere in this area, a long put spread 3 months out, right? That gives me plenty of time in case I got to sit through nonsense like this. I never got filled on the spread because remember, when I put an order out there, I don't put it at the mid price or I don't take out an offer because I want to be filled right now. I'll put in a lower price, a limit order, and then maybe the market jumps around a bit and maybe I get filled at a better price. Okay, I never got filled, so I don't have the position. Okay, no problem. If I had gotten filled, that position would be a little bit against me right now. Okay, if I was filled, but I wouldn't be too worried about it really because again, it's a 90-day position, right? And that's what you have to do, at least 90 days when you're doing long premium. Now, so I'm not in that. But as far as short premium goes, I was thinking somewhere around here. Where are we at? 613? What's the high right now? 612, right? So we're fooling around on the high, around 612, right? So I was considering like a 615 or a 620 short call. Okay. Now that's this area up in here, right? Or maybe like the short 620 by 625, right? That would be a bear call spread, something like that, because this thing would really have to work its way up there. And that's a possible failed high area. Now, again, there's no confirmation. I would just be stepping in front of it. And I was looking at the prices. I mean, the prices for now. Remember, this is short premium, so I was looking at 10 days out. 10 days. The max I would look at is maybe 30 days out, but I was looking at 10-day prices, and it was like $1.15, $1.20 for that spread. I'm like, all right, that's not bad. That's not bad. But I was just like, this market's ridiculous. And I'd feel more comfortable opening the spread if we went into the new high territory, the failed high area, maybe tomorrow, or maybe after one of these quarterly reports, right? Which means I could probably get the 620, 625 cheaper, right? If we're up in that area. Because remember, I'm shorting a call and I'm buying a call. I'm not going to get into options trades here, but that's what I was thinking. I just don't like this price action today. So I would feel more comfortable doing that if I saw a pin bar, by noon, if I saw a pin bar, which could still go the wrong way, or just something more bearish. There's just nothing here. And every time the market attempts to pull back intraday, it just gets bought up. Like it's like nonsense mode. So that's my idea as far as shorting, and if you're going to build a position, right? I mean, you can consider doing, if this thing starts pushing above, that's where you'd be doing numerous bear call spreads, but overlapping each other. Like, for example, 620, 625, and then maybe you do like 630, 635, 640, 645, something like that, right? If the market just continues moving ridiculous like that. And I would, to be safer with it, because again, when you're shorting it, you need the market to stop moving. That's what you need. And then the time decay is where you're looking to make the money from. This is why you don't short options 3 months out, right? You short options a month out or a few weeks out, because the time decay is faster. And that's what you want. If the market fools around and does nothing for a couple of days and doesn't push your prices, then your chances of making money are greater. It's just when you're wrong, the risk is asymmetrical. When you're wrong and you lose, you are always going to lose more than what you are trying to make when you're taking short premium positions. That's just the way it is, right? When you're long premium positions, that's where the risk reward makes sense. You risk one to make two, right? That's long premium. But when you are short premium, it's usually you risk two to make one. That's how it is. But your probability of making that one is greater. Okay. So yeah. Yeah. So that's why, Kai, but sometimes you have to step in when the market, before it becomes obvious, right? So that's where levels can help you. And this area, I suspect this area on the Nasdaq, I could do a measurement. You could look at some proportions, right? Like we can even do something like this. We can go to the extension, the extension tool, and you could just do some measurements like this, right? And you project from here, and you can find there are levels, there are projections up in here. I mean, look at this, right? Look at this. We're right there right now. Okay, look at this up here. So you have levels up there. It doesn't mean that those levels are going to stick, but there are points of reference. And when you have something like that, and you see hesitant price action, or sometimes you just step in front of it, and you just depend on the risk controls of the option position to protect you. You have to have the risk controls. Like I would not go outright short calls in, like, that's, you're just asking for trouble, right? You have to have those long options to protect you in those situations. And if you lose, you're going to lose more than what you were trying to make. Now, the other thing with the short options, again, is don't go for the full profit. That's another thing. I notice a lot of these options guys, because I watch some of these option videos on YouTube, And some of the more experienced guys I noticed, and these aren't like fake gurus. These are like well-known options guys that I respect. And I notice what they do a lot of times is they only look to make 30 to 50% of the premium, not the full premium that they take in. So if you make $100, for example, right, you have $100 premium taken in, you're only looking to make 30 or $40. But if you're up 30, 40, $50, you close the position. You don't try to make the whole thing, because when you do that, you're asking for trouble, and chances are, you're more likely to lose. This is especially true for the zero DTE options, especially for that. You take your small bite and you get the F out. You don't try to make the full thing, right? So that's something to keep in mind with these types of options. So, how do you make money with that? Well, obviously you have to take size, right? Like, to make it meaningful, you have to take 5 or 10 contracts, something like that, right? To make that meaningful. So just a few things to keep in mind with options. Again, this is not an option stream, but since I'm talking about it, this is how I'm looking to play these type of markets, right? I'm not taking shares outright. If I was going to buy shares outright, first of all, I wouldn't short this thing. I would look to go long. And to go long, I need to see some important support levels. This was the closest we got, was on that day, and it was only for that day. And it's going to be very hard to build a position like that, even doing like one share at a time. That's why, right. So I mean, right, like you can't really teach a strategy. By the way, speaking of that, you guys should be watching Losing Money. Yeah, I know. Right. It depends. It depends, DJ. Like, it depends. Like, when it comes to zero DTE, I look at the iron condors, and there's lots of stuff on YouTube about this. And you just have to grab what you can, right? And with the iron condors, they even have like a time criteria. You're in it for 2 hours and you're done. Even if you're losing, you get out, right? You cannot hold on to that thing the whole day, because, and you have to use iron condors. Like, I was trying to mess around, on the short side without the long protection. Forget it, man. Forget it. It's a bad idea. It's a very bad idea. In slow, quieter markets, yeah, this is easy. But then you get these wide moves at the open. Forget it, man. So anyway, but yeah, there's something to that. You just have to be very formulaic about it, and you really have to stick to the rules. That's why automating option stuff like that, I think, is a great idea, because you could put like a time stop on it and say, okay, by this time of the day, I'm out, and it automatically closes. Right? Doesn't matter if you're winning or losing, you're out, and that's what protects you from those big losing trades. So anyway, that protects you even further than the long options, because just because you have the long options, you can still lose a decent amount of money. But anyway, that's how I would play something like this. And so that means today, on a day like this, I'm not opening up any options positions. And the type of options position I'm looking at are vertical spreads, and I would be looking at bear spreads to collect premium in this area. And we need to get up into that area. And the aggressive means you step into it and it's going against you, and you're just stepping in front of it, anticipating that it's going to fake, right? Which is a very risky thing. We're going right into holiday season, and we're going into money printing mode. Like, there's all these things that are pointing to this thing going higher, right? So that you're stepping in front of that. Just keep that in mind. Or you could wait for some type of confirmation, right? Which is the safer thing to do. Maybe you won't get the best prices or the greatest premiums, but you're trying to avoid the freight train that that could be just ridiculous mode, right? So, and that everything I just said here about the Nasdaq goes for the S&P as well. It's just the S&P is going to be more tame. That's all. Uh, yeah, yeah. So Iron Condor is nothing more than two vertical spreads put together. That's all it is. You just have, your short options are together, and you're buying long options to protect yourself on both sides. That's all it is. So it's like having, you're buying a spread and you're selling a spread, and together it's an iron condor, and you're just protected on both sides. Just keep in mind, again, the premium that you take in is going to be less than what you risk. But if the market goes nuts, you're protected, right? And that's the great thing about iron condors. The ideal situation for an iron condor, of course, is for the market to just waste time and not really go anywhere, right? In that period that you have. That's why people like to use them for zero DTEs. Because you first couple of hours of the day, if the market is trying to find a way to go and it wastes time and whatever, then you can make a little money. But remember, you're only looking for 30% or 40% of your premium. You're not looking for the full premium, right? So that's where I learned that stuff was from those. There's tons of stuff on YouTube about that. If you watch the tasty work stuff with Sosnoff, that's where a lot of the ideas come from. And he's a long time. That guy has been in the business forever. So he even pioneered. He helped. He had a hand in pioneering the weeklies and the zero DTE options. He had the CME consulted him as just for some ideas on that type of thing. So that's how the kind of weight that guy carries. Anyway, and speaking of YouTube guys, you guys know I like that guy Roman Paolucci because maybe he's from Romania. No, he's not from Romania, but his name is Roman. So anyway, you guys want to know like the reality of this business? Oh, here's what I got to make. Here's why I thought about him for a moment. I just got to say this real quick because it's very educational. You guys, like for the longest time, I always say the markets are random. Markets are random. But you know what? He corrected me. I'm wrong. The markets are not random. He put the math behind it. So when I was saying markets are random, my statement was always markets are mostly random, but not always random because obviously they trend, right? But here's how I stand corrected. He defines random as a random system like playing a slot machine. That's a pure random system where your probabilities are always fixed, right? The casino always has the advantage because your expected value is always negative in the casino's favor. And there's nothing you can do to change that when you play a slot machine. There are other games too where the probabilities are fixed. That's a random game. No matter what you do, you cannot change those probabilities. But in the market's a game of incomplete information, just like poker. Okay. And you can do things to change those probabilities. Therefore, the market is not random. Okay. So see, I learned something from that guy. So now I'm not as ignorant as I was over the recent couple of years, right? So that's a very interesting point that he made. And he proved this with math. That's why you guys should watch him. His website, I think it's on YouTube. It's Quant Guild at Quant Guild. And his name is Roman Paolucci. He's a graduate of Columbia, Ivy League, and he's a quant researcher and trader from Bloomberg. He worked as a professional quant researcher at Bloomberg. The guy knows what he's talking about, right? And he's a young guy, but that's like if you want to grow in this space and really get a sense of how markets truly work on a mathematical level, even if you don't know the math, just listen to some of his stuff. I mean, my head hurts when I listen to his stuff. I have a hard time consuming that stuff because I'm not a math guy. But you know what? I like being the dumbest guy in the room because it means I'm learning, right? So I like listening to his stuff, even though I don't fully understand it. I can't read one of those formulas and understand what the formula means. I need to go look up stuff, but that's how you learn. So anyway, that's my plug there. Okay, and I don't get anything out of it if you go watch him. I'm not an affiliate or anything, but if you want to grow and learn, that's the area where I look to grow and learn. That's the area. All right. Anyway, because we're always growing and learning in this business. All right, enough of that. So I covered so far the cues. Let's jump over to the bond market real quick. Okay, so bond market, right? Let's take a look. ZN1. Okay, so this here, of course, is the 10-year note futures. Let's take a look at the the weekly. Let's go to the weekly 1 week, right? And this is important to watch because this is where we're going to get signs of stuff when the market decides to get nuts, right? And so we know when bond prices go higher, yields go lower. In an inflationary environment, yields should be going lower. Bond prices should be going higher. That's what we're getting. Okay, so far, and the Fed has signaled they just want to print money forever. Okay, that's what they seem to be saying. So we're at an important resistance area on these bonds We have nothing but higher lows and higher highs. Now, we need to, of course, get beyond this area right here. And remember, the Fed is expected to cut the fourth week of this month, and they're also expected to cut again in December, right? 25 basis points each time. That's priced in. That's what's priced in. So they're aggressively cutting. Plus, they plan to they're going to now start quantitative easing or expand their balance sheet. They've said this, right? Powell has said this. So I don't know. With all that kind of talk, this should be going higher. Okay. So these resistances are likely to break, in my opinion, because you have those fundamental drivers behind it. And if that's the case, we should see yields coming off. Now let's take a look at the yields. All right. The yields should be inverse to this. US 10Y. Now remember, the 10-year note, this is what, like, car loans and home loans and all kinds of loans are based on this thing. They're using that. So yields are going lower as suspected, right? Okay, so yield, this is the interest rate. This is what, when they say interest rates are going higher or lower, this is it. So here's our range, okay? This is our range. We're in a range here too. Now, rates have been generally bullish. This is weekly, right? Interest rates on the weekly. Rates have generally been bullish. And so far, this pullback isn't really that significant. Like, there's nothing really a whole lot going on here that's really worth getting excited about. But what you have here are the levels. This is where a chart can be meaningful. If we break this low on the yield, right? That's 3.59% is the low here, right? And now the Fed is expecting what, 3.25, I think. Fear of economic contraction, right, Kai? Right, and right. So you would think oil would be doing a little bit better than this, but right, okay. And yields going lower. So yields means cheaper money. Lower yields means cheaper money, right? The Fed keeps talking about that. They're going that route. And so watch for these yields to break. Here's the thing, though. Yields have been a lot lower, man. This is the thing. I mean, look at this. Going all the way back, yields were here, right, a few years ago. So we have a lot of room. Like this. The thing is, inflation at this time wasn't where we are now. So we have high inflation, as we all know in this country, right? You just go to the grocery store, and we have a lot of room. We're not even at the 50% retracement on these yields. So if we have a lot of room to pull back on these yields, it means cheaper money in the future. That's a strong argument for higher stocks, right? Higher gold, higher Bitcoin. Right. Oil can easily be manipulated. Right. So that's why oil can do things that just don't make sense. And oil is certainly a bargaining tool. Right. So that's why you can't, oil is supposed to be part of the economic formula, assuming that it's moving freely. Right. So USM2, okay, is Fed's money supply. Let's take a look at that while we're talking about bonds. But so do you guys see that? Like, this is like the macroeconomic picture here. There's a lot of room for these yields to pull back, and the market's on their highs right now. What happens if these yields pull back to that 50% point, right? 50% retracement of this larger structure here. That means extremely cheap money. Like, where are we going to be? Like, Nasdaq's going to be at like what, 30,000? Like, where's gold going to be? Where's Bitcoin? Like, there's a lot of fundamental argument. This is why I'm like so like careful with the shorts, because everything is pointing to higher prices, right? And we're not talking about higher prices because of great economy. We're talking about higher prices because of inflation. And it may seem irrational, but that's what it is. It's hard to understand sometimes. All right, so let's take a look at the money supply chart while we're on this. So USM2 money supply. This is the M2 money supply. Look at that. Look at that. Right? I've seen other people talk about this on YouTube. Look at this. This is the M2 money supply. Does that look like it's contracting to you? It's on all-time high. Look, this was the high before that back here. Look at this. This is weekly. What is this? Back in March, we were at the all-time high. We're beyond that right now. So this is the balance sheet expansion. Okay. What was that symbol for the balance sheet again? I mean, so this right here is your argument for gold. This right here is your argument for Bitcoin, everything, right? So if the money supply expands at this rate, right? I mean, look at this. This is exponential. So until this turns around, clearly turns around, I don't know, man. We're looking at, like, you know what I say? Buy wheelbarrows. We're going to need them because our money's worthless, man. Buy wheelbarrows. Buy companies that make wheelbarrows. All right. So what was that? Okay, what is that? WAL. That's the balance sheet. Oh no, that's oil, right? Is that oil? WALCL. Is that oil? So we'll jump to gold real quick. Let's jump over to gold. So you guys see where I'm coming at with this? Look, I'm not an economist, but putting this economic picture together is important, right? Just being aware of it. Look at this is gold on the weekly. This is weekly gold. Look at this. Look at this. It's vertical. It looks like an altcoin. That's gold. I mean, that's ridiculous, man. Balance sheet. Oh, it's the balance sheet. Okay, we'll jump over to that after gold here. But look at this. Every week we look at this, I say the same thing. What can we do? We're going to buy this thing now. Let's go to the daily. What could we do? There are no pullbacks in this thing. What can we do? You could try to buy the breakout, like the daily high breakout, and hope it continues. I mean, you could mess around and day trade this thing. Let's look at the 5-minute chart on gold. Let's see what gold here's gold today. Okay, just today. Let's look at today's price action. Okay, so starting at the stock market. Well, actually, it started moving before the stock market. This is today's gold. Okay, look at this. Just buy the pullbacks, or never even that. Buy the breakout. Look, breakout. Look, consolidation, breakout. Like it's stupid. It's stupid easy. Of course, like the day before, you could have gotten caught in some of that nonsense. But come on, man, it's gold. So that's what I mean. Something that's super strong like that. When it's obviously strong and the daily chart is just like in ridiculous mode, the day trade opportunities, in my opinion, are a little easier because there's no reason to short this thing. You're just looking for longs and longs only, right? So just wait for long setups. Look at this. It's nuts, man. So anyway, that's gold. I would not swing trade this thing, and I would not short this thing. My silver guy said he doesn't have any silver on him. Well, oh, really? I mean, I've heard that argument for a while. Like the dealers have been low on silver, but I can imagine that was years ago, DJ. I can imagine now silver's got to be really, really hard to get. I mean, I know silver has been ridiculous too. Let's take a look. XAUUSD. Here's silver. Look at this. I'm afraid to even get the price here. What are we at? 52.59. Dude, a year ago we were half of this price. Okay, a year ago. So silver's a little more wild. Like silver pulls back. We went from 54.85 to what, 50? We moved like 4 points in one day. I mean, silver, that's a big move for silver. So this thing can move, right? So I think if there's any buying opportunity, you want to watch silver. And there's plenty of room for this thing to pull back. Silver can get a little wild. It's not as stable as gold. But as long as we have that M2 money supply looking the way it looks, these things are going to have a bid under them. That's the thing. So I would watch for old resistance levels, even minor ones. Watch them or pull out your retracement tool, okay, and do a measurement. Look for the 50% area, okay? Like from here to here, 50% is around here somewhere. That might be a good pullback area to pick some up. Whether you're buying something like this, the CFD, right, or buying options, you could buy options in some of they have those options like GLD, or they have one for silver. I think it's SLV. You can do options with that. You can also consider, someone came out with the idea of gold stocks, because the gold stocks aren't reflecting this move in gold yet. So you can even buy gold stocks. It should not show. It should not show in gold, but risk on. Like, well, I mean, and it is though. Or maybe there's a delay, Kai. But I mean, we're seeing. I think we're seeing it in the stocks being priced into the stocks. I mean, the stocks are ridiculous. They're back at their highs. You know. So I mean, I get when Kai, when it's Captain Obvious like that. You know, the markets expect 2021 liquidity to like when it's like obvious and everyone has their Captain Obvious hat on, I do get hesitant because, like, man, it can't be that obvious. So usually that's when it's setting up to like screw everyone, right? It's setting up the whole world is long because, whoa, it's going to go this way. It has to continue, and that's usually the worst time to be getting in, right? So that's why it's like be aware of the pullback areas. So when you get those opportunities, just keep in mind because these things are so high. I think you just have to be a little bit more defensive and just be prepared. That's why options are great for controlling your risk in that way, you know, the vertical spreads, rather than going outright and buying XAG, right, or XAU and trying to hold on to that, you know, or buying shares of GLD and trying to hold on to that. I think the options at least give you some more protection in case. And so you could still try to make some money on the obvious side without having to face the larger magnitude of risk, right? If these things turn for some reason, even if it's briefly, right? Because if you're leveraged, you can get hammered, right? So anyway, all right. So that's gold and silver. Look at the bonds. Let's take a quick look at that balance sheet because I haven't looked at that before. WALCL balance sheet, total assets, liabilities, Federal Reserve. Let's take. Oh, less than a week. All right. All right. Relax. Okay. So let me refresh this chart here. What are we looking at here? This is a graph of the Fed's balance sheet. Okay, on a weekly time frame. So they've been, I guess, contracting their balance. Like this looks like. I mean, look at this. So zooming out a bit. This is the Fed's balance sheet. I guess you could say when you're talking about assets and liabilities, I assume you're talking about mostly treasuries in the form of treasuries. I mean, I don't know what other Fed assets and liabilities would be. I'm not an economist. We'd have to call Powell up on the phone and ask him. So, I mean, this looks like I don't think we can apply technical analysis to this, but look at this. So they've been contracting their balance sheet, and there looks like they're going to pivot and they're going to start an expansion again. I mean, look at this. We're not even at the highs. So there's a lot of things here that just point to we're going to be swimming in dollars. We're going to be swimming. That's why get your wheelbarrows ready, man. So that's an interesting chart. Thanks for thanks Alex for sharing. Let me put it like gold is where you when your risk is on when if you go risk. So if this gold surge may be not just China. Right. So I mean, yeah, right. Typically fear gold, people buy gold because they want a safety, right? They want to put their money somewhere safe. They don't trust the dollar anymore, clearly. Right. And other countries have said, you know what, screw the dollar. The US government's going to screw us and we're not going to get screwed this time. Because you know, we pay back our bills with cheap money. We print it and we say, hey, here's some paper. We're paying our bills back with some worthless paper. Right? All right. So let's take a look at some guys had mentioned some things earlier. DJ, you had mentioned something earlier. What was it? Let me see. I want to make sure DJ hasn't been here such a long time, so I want to make sure I look at something he mentioned here. Let me see. What was it, DJ? I'm just looking back at the chart here, at the chat. I know you had something in here. Was it a stock? I'm just looking back here. I can't remember. Let me find it. So SPY. Okay, I covered the SPY. I think it was the car stock. But I smell fear, not just, well, And right. But keep in mind, right? The fear can just be a perception. Right. And yes, right. It can be more, it can be a whole bunch of things. And it can just be a perception, right? You could just fear something that never actually materializes, right? And so the market prices that in for nothing. That can happen also. There's so many ways it can go. So, oh, okay. All right. So we covered the SPY, right? I mean, or actually, let's go to SPY real quick. SPY and the Nasdaq are the same thing, right? So, with the SPY, I mean, I'll pull up the SPY just to give you the numbers, but it's the same thing. Well, for the short term, he's probably looking for that. I mean, I had the same idea, but I'm just very hesitant to do it. If you're going to do it, at least look for the failed low and short term. So if he's looking for a short term move, I mean, hey, you may get something on the short term, but bigger picture, you want to buy that pullback. When we do get if we get a short term pullback, then that's where you should be looking for the longs. But as far as SPY goes, 674 is the high. And you figure you have this area up here, which is your failed low area. It might be a little wider. So all the way up to like 688. I mean, you could even round that to maybe 690. I mean, let me pull my extension tool out, right? And let's just take a quick, let's just measure a movement. Let's see. What movement I could measure this one right here. Let's see what this brings up. I mean, we've compromised those levels. Let me find another movement. We'll go back a little further here, right? So look, we can measure this one to here. Do we have anything here? Not really. We're above all those levels too. Man, I have to go lower. I'm going to try this one over here. Okay, something like this. Do we have anything here? Let's see. Yeah, this one we're close. So I mean, you're saying I'm fitting it. It's subjective, but no, I'm looking for whatever proportion matches. This one matches. 26. This is the 2618 around 677.35. So 680. So in that area above 680. But man, there's a wide range in there. The next one is way higher. So I would look at that 685, 690 as the prices to be looking for those short options, the short calls. Okay. And again, it would be for short term. So something like if I were to do call spreads, which I would do the Nasdaq, it would only be for a couple of weeks or a month, something like that, looking for a brief pullback. But just keep in mind, we're going into holiday mode. Now, interesting thing about holiday mode that I have to say, which this is something that confuses me, and maybe you guys have better insight than me on this, but I see all these videos about how the consumer here in this country, no one has any money, right? And people have to borrow money to buy groceries. Like this seems to be a thing that's talked about. Now I don't know how I don't know the magnitude of it, but I keep seeing videos. And of course, I know you can't believe everything you see on YouTube, and a lot of that stuff could just be extreme. But if that's true, then what is that going to say about our coming holiday season? If people can't afford to buy groceries and they have to borrow money, how are they going to buy gifts? They're going to buy gifts. They're going to borrow more money to do that too, right? To buy stuff that you really don't need. So I don't know. I'm suspecting we get a softer holiday season, but we're not going to know this until Q1, right? When all the companies come out and say, "Hey, we made a little less money than we thought during the holidays," right? So anyway, just something to keep in mind. So we're not going to see it during the holidays. Maybe retail sales numbers might reflect it. Maybe Michigan consumer sentiment might reflect it. What do you guys think of that? So let's take a look at the stock. We're gonna go there now, DJ. We're gonna go there now. Okay. Now remember, this stock is going to have a heavy weight. I believe it's in the S&P, and it's going to have a heavy weight in the Nasdaq. So a lot of that Nasdaq and S&P talk may apply to this here as well. Let's take a look. So I don't know what day are they coming out with their numbers. Let's take a look at a weekly chart. So on the short term, right, we see a higher low. It looks like it's going to go higher. But look where we are in the bigger picture. I mean, look where we are. Look at that. So that right there. So DJ, I definitely see your short argument. I see that. That's a classic short argument right there. At least for the short term, right? And pullbacks on something like this. I mean, this thing could be wild. You have a little gap inside of here. Look at this little gap, right? That might be a good place to gauge your profit, a profit objective. I don't know if you're using options or if you're shorting the stock outright. I mean, I personally would just use options, right? Because I like the protection, and you don't have to worry about using stop loss orders and getting stopped out when you're dealing with options, right? And your loss is fixed and all that stuff. But this would be great for vertical spreads. I mean, I going into it before the report is highly risky. You just have to have the balls to do it, or you wait until after the report. But a lot of the move may be in process after the report, so it's like you have to bet on the report and hope for the best. Okay, so that's Wednesday. Okay, Wednesday at 4 o'clock or whatever. So you can position yourself. I mean, think about it. Something like this. Now, I would consider vertical spreads, right? You have two types, right? You have the long premium and short premium. Short premium has the asymmetrical risk, so you're risking two to win one, right? And the long premium is your standard risk. You're risking one to make two, right? But the thing is, your chances of losing are greater on the long premium. So just a gamble, okay? Out of the money, right? So out of the money, so you're thinking on the short side. So I'd be thinking, what, long put, short put, right? A bear put spread, and I mean you can be looking at 400 even. Where are we at right now? 447, so at 450. So 4 even, maybe even this area right here. Look at this old resistance right here, 367. I don't think you'll get that in one day, but if this thing put 400 is a pretty that's this thing could do 400. I mean, look, in one day, this thing went from 453. It almost was there in one day. Okay, so it can certainly. So I'm sure the premiums are going to be expensive for the single options, but that's the whole point of a vertical spread, right? You're making it cheaper. Um, yeah. So I mean, this is a. I don't even think you need to be strongly familiar with the fundamentals, because this is a hype stock. This is all about tweet. This is all about what goes on Twitter. This is all about, just what people are feeling at the moment, and all the clowns on Twitter, and and Mr. Twitter himself putting out tweets. I mean, come on, man. There's been so much talk about this company that's overvalued, dramatically overvalued. They're not going to sell cars, blah, 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 blah. And the stock only goes higher and higher and higher. So I don't even think fundamentals matter that much, because people that seem to bet against this thing fundamentally don't make money. Um, isn't this a second possible top of a double top of a corrective move, or currently fourth wave of an impulse? Well, yes. One, two, this could be 3, 4. Yes, and you may get this could possibly be a fifth wave into here like this. It's very possible, if we're going to count this structure right here, just the waves of this structure. Remember, this is a weekly time frame. So yeah, that you can make that count, right? And that, which means this thing may have one more leg. But the thing is, one more leg may be that. That may be your fifth leg, something like that. Which would be looking at maybe 488, maybe you're looking at 500, possibly. So maybe after the report, maybe you get a spike on the report, and maybe the next day it sells off. Oh, who knows, right? But just keep in mind that the general market is generally strong, and this thing is near its highs. So there's a lot of strength in this thing. Taking a short is just going to be harder. I mean, look, it worked. Clearly, there's many pullbacks, smaller pullbacks on these things. So it's just tough. Like, shorting this, if you're playing that report, I mean, a more aggressive thing to do, if you're into that, is you can do a straddle, a long straddle, where a long straddle will probably be extremely expensive on something like this, right? Where you're buying a call and a put, and you need this thing to move dramatically. The typical play with these type of reports is usually a long straddle because you're expecting a big move either way, and the move should be able to pay for both sides of the both premiums that you're paying plus more. But man, and then you'd have to buy some time. Oh, like yeah, it'd probably be too expensive. Forget it. I wouldn't do a long straddle on this. And a short straddle, forget it too, because you take in huge premiums. But man, if this thing goes against you, think about a short straddle for a moment, right? You're short a call, short a put at the same price, right? So if this thing goes, you're hoping that it stays inside of a large range. The premium that you would take in on a short straddle, especially if you're looking at a very short period, like a zero DTE or whatever. Actually, for a report like that, you'd have to do like a 1 day out or something. You would probably be taking in $1,000, per contract for because you're doing two contracts, right? Long and you're doing a call and a put short, but the risk you take is enormous, right? Because this thing decides to really expand, you're going to lose money quickly. But here's the thing with short straddles, or you can also even think about a strangle, but those are very, very aggressive because you're pulling in premiums on two sides. The market would have to really go far against you for you to lose that premium and lose money on top of it, right? Uh, yes, yeah, it's a lot of money because of the moves that this thing makes. It's extremely expensive. You're probably better off staying away from the short premium. Well, those like the straddles and those type of things, and vertical spreads. Even if you do short premium, again, like for example, let's say one contract is 3 grand, right? Which is very possible. One contract, 3 grand. Even if you go out in time, you're doing a long and a short, right? So let's say you're doing a short call, you're taking in 3 grand, but then you're doing a long call 5 points above, maybe 10 points above, right? And it's going to cost you 2 grand. So the total cost would be $1,000. Or I mean, like when I was looking at this with the Nasdaq, my total cost was like, $1.25, right? But when you look at the actual premiums of the options, they were $20 for 3 months out on the Nasdaq. So I would imagine this stock is going to be more than that. But when you do the long and the short, you're controlling that cost. You're reducing that cost dramatically. That's the whole point of a long premium vertical spread, is to reduce that cost to something manageable. And you're also reducing your risk because your maximum loss is going to be that premium on a long premium spread, right? The short premium spread, the most you could make is that short premium, right? And the most you could lose is going to be the separation of the two prices, which is usually more than what you're trying to make. Like to give you an example, with the Qs, I was looking at a dollar, like let's just say to make $1.25. Oh no, on the short side, it was like $1.80 on the short side. Make $1.80, but if I'm wrong, I'm losing $5. So it'd be $5 minus the $1.80. That's my max loss. So it's like what, $3, something like that. 280, whatever. So I'm trying to make $1.80, but I'm losing $3 if I'm wrong, right? In total. So that's usually how the short side works. Okay. But the probability of making money on that trade is greater. Why? Because the market doesn't need to go one way. The market can actually show me two scenarios. It can do nothing, which I will make money, or it can go my way, which I will make money, right? If it goes against me, I lose money. But there are two possibilities where I can make money, right? So anyway, just something to keep in mind. I could talk about options all day. I'll put you guys to sleep in 2 seconds. You know how many girls would tell me, I can't sleep. Can you talk about options? Oh, sure. And then within 30 seconds, that's been a while though. I don't get girls anymore. So anyway, all right, enough of that stuff. So you guys clear on that? um, yeah. So you clear on that, DJ? So yeah, the short side is tricky, man. And you just have to understand what you're dealing with. Now, keep in mind, and before you mentioned you're looking to iron condors. Iron condors are more for like you're expecting the market to do nothing or just kind of jumble around in a range. You're looking to take advantage of just time decay. It's a delta neutral position usually, or more like that, right? That's an iron condor. Whereas a vertical spread is you're looking to take one side. At least I'm good with jokes. Barely, Alex. I think you're the only one that laughs. Okay, so I don't know. I certainly don't think I can make money as a comic. I mean, I don't even make money at this. Come on, man. I do my streams and I do this for fun. I do this because I know you guys are going to show up. Otherwise, this is an absolute very poor use of my time. I don't make any money. Okay, talking about charts. Anyway, um, okay. So, any questions, you guys? I know I've been talking for a while. I always say, okay, I'm only going to do an hour today, and then I keep talking. But DJ is here, man. I have to talk a little bit more for DJ. I haven't seen DJ in years. So, anything you guys want to see? Have I covered all the things we talked about? We got the macroeconomic picture, right? Oh, we forgot to look at oil. I appreciate that, Alex. Let's just take a quick look. I'm not going to spend a lot of time on this. CL1, right? Because oil's tricky. And oil, while I believe, with lowering rates and all that, we should see inflation with oil, we don't. But oil can also be manipulated pretty easily, right? So look at this. And again, like you guys know, I'm not an economist. And theoretically, something like oil should be doing better. And it looks like garbage here. So the government can come out and say, see, we don't have inflation. Look at oil. Gas prices are going lower, everyone. Look at oil. Where's the inflation? I don't see it. By the way, my assistant goes to the grocery store for me. My servant goes to the grocery store. So I don't even see those prices. Yeah, great. But look at this. Look at this. I mean, we're sitting on the lows. This thing looks very weak. We've looked at oil over the weeks. We looked at a possibility. We talked about a long, right? We had that guy here from the UK, Ricky, and he was talking about long, right? We were talking about these supports. That failed, right? That broke. And I mean, look, we're at the next support. This looks like garbage. So how is it that they can argue, how is it that we have inflation when oil is doing this? Right? It's strange, right? I haven't seen many interesting charts. We can look at total. Okay, to the Bitcoin dominance. Total 3 ES Okay, we can take a quick look at that. All right, but you guys see this with oil? Now, just to be a contrarian here, this would be an aggressive long. Okay? Like I wouldn't be in a hurry here to gotta love the of us. Right. So just to be, aggressive and contrarian, maybe a long signal here. I mean, look at this. You're at a double bottom on oil. Oil options, anyone? USO? I mean, theoretically, we have a lower high. So theoretically, this should make a lower low. Look at the lower high right here. So it should make a lower low. But I mean, come on, man. How much lower is oil going to go? Look at this. Just going back a bit. I mean, look at this. And we have a weakening dollar and oil is priced in dollars. How is this going lower? So obviously there are other things affect the demand of oil and energy. So, and if we're expecting a lower economic growth or activity, whatever, that means lower demand on oil. Right? So this might be a contrarian play for a long. I mean, on the bigger picture, this really is just, look, it's just a pullback. Look, it's just a higher low pullback. While everyone else, oil is going to zero. I'm going to short oil. I don't know, man. Like if you were going to short oil, this is not the place. You see, so something to keep in mind. For those of you that like to participate in these other markets, like this is not the most attractive place to be going short if you're going to short it. Just something to keep in mind. At least wait for a resistance level. At least your first resistance level is like 66, 65 area, something like that. And we're fooling around at 57. Strange. right? So I would be thinking contrarian here. Something like this would be short put, long put, right? A bull put spread on something like this, betting that oil doesn't break or you get the failed low. And if it breaks, well, you take the loss, but it's fixed. Anyway, lower half of households. Right. Well, and again, it's because our the consumer or the whatever we suffer inflation, right, hurts us. The poor people are the ones that are going to feel the pain with the inflation, right? Meanwhile, the stock market continues to rise, and who's heavily invested usually? Right, rich people, right? So yeah, anyway, it's interesting, right? DJ, I don't know, just from a contrarian point of view, I don't follow oil fundamentals, right? So I'm not as in tune with the energy fundamentals, and I know this can be heavily manipulated, right? Like gold can be too, but just something to keep in mind, right? So anyway, especially in the face of a weakening dollar, if you have assets inflation, right? If you have hard assets, property, metals, a business, stock, right? Then your inflation actually benefits you. But if you don't have any of those things, then inflation is not a good thing, right? So it seems like in this country, our goal is to make our dollar worthless so that everyone does business with us. It's like a competition with China. But I don't know, man. Right, right. Because they all have stocks, they all have property, they all have hard assets. Right. So that's why the rich get richer while we hold on to these worthless dollars, and they have property, right? Or they buy hard assets, and the value of those things goes higher. So anyway, let's take a look at that total. What time is it? Oh, you know what? Now I got to wrap this up, man. We'll look at it next time. I'm sorry, Alex. We'll take a look at it next time. Plus, you need to go to bed, man. It's like midnight over there. Oh, is it Kai was asking me? Anyway, yeah, come on, Kai. It's midnight for you too over there almost. All right, no, I know it's not that time, but I know my EU guys. I got my EU guys over here. So yeah, I'm gonna wrap it up now because otherwise I'll be talking all night. So I'll leave you guys with this. All right, so you guys just be prepared for that pullback on Bitcoin if you're watching Bitcoin. We never got into the Trade Scanner Pro, but that's okay. We usually don't see much stuff on the larger time frames anyway with that thing. It's not really meant for the larger time frames. Um, hey, how are you? Haven't seen you in forever. Hey, from Texas, right? I think you're in Texas. In where was it? Not Houston. What's the other place over there where they do the? I can't think of it right now. The name of the place over there where they have where Rogan is. Can't think of it right now. Anyway, yeah, no problem. Yeah, hey, I'm still just doing Mondays. That's right. Austin, that's it. That's what I meant. Okay, Austin. That's right. A from Austin. Cool. I remember you, man. Good to see you. All my old timers are coming back. But yeah, DJ has you beat though. DJ was following me back in 2018, so he's got you beat. But it's still good to see you. But yeah, I'm just doing Mondays right now. I'm not doing the AM trade sessions. So yeah, so guys, again, it's good seeing you. Yeah, cool. Okay, yeah, I've just been trying to do my thing, but I appreciate you stopping by. It's always nice to see an old name. So, guys, again, I appreciate the time with me. Thank you for your questions. If you have any questions, you guys know where to find me. All right, marketmarkpremarkets.com, and I'll get back to you by email or whatever, and all that. Okay, so I hope you found value in the stream, and I hope I at least helped you prepared and gave you some perspective for the week and all that. All right, so again, every Monday, 3 p.m. Eastern time, and we'll go from there. Remember to stay tuned with that economic calendar so you're aware of what's going on. All right, guys? All right, cool. All right, so enjoy. So thanks for watching. Enjoy the rest of your day, the rest of your evening, wherever you're from, and thank you again for watching.